Hello friends, welcome back to another Spectre video. In today's lesson, we will be going over the basics of liquidity, to be more specific, where the bulk of liquidity actually lies and how you could use them to improve your trading. So, let's get straight into it. There are two types of liquidity that exists in the market, and that is buy-side liquidity, where sellers position their stops, and sell-side liquidity, where buyers position their stops. Understanding these two types of liquidity and knowing which liquidity pools price is likely to target next is important if you want to follow the footsteps of the big guys that control the markets, as they have to generate their own liquidity to pair their positions with. Which brings me on to my next point, which is what forms of liquidity there is. The bulk of liquidity usually appear at old highs and old lows, which could be previous days or weeks. Typically, the higher time frame you go for these points, the more weight it holds, and all of these go under swing points. Now, for those who have no idea what swing points are, they are a 3-candle pattern with the middle candle having the highest or lowest wick, followed by 2 candles on its left and right having lower or higher wicks. So in this example, the candle on the left is a swing high as the middle candle has the highest wick, whereas the 2 candles on its side have wicks that are lower. The idea is the same for the candles on the right, but it's inverted, which makes a swing low. So the one on the left is a swing high and the one on the right is a swing low. Now that you know what swing points are, I would like to introduce you to two more secondary forms of liquidity, which are trendline liquidity and equal highs or lows. Ismail would teach these in more detail in the future when we release videos on market maker traps, but for now, the basic idea for trendline liquidity is when price forms a retail trendline pattern, it induces dumb money to position their stops above or below the trendline with expectations that it will continue in that direction. However, this just creates liquidity for those who control the markets, and the trend line will get raided in the future by them to pair their positions with in the opposing direction. This is the same concept for equal highs and lows. They form retail support and resistance, which will trick dumb money into entering the wrong side of the markets. Alright, so now that you've known all the different forms of liquidity and the different types of liquidity, we are going to be using real life chart examples with the replay tool to reinforce your knowledge. Okay, so on the weekly, we are going to go off the idea that we're bearish. Obviously, there'll be future videos on order flow and top-down analysis, but for now, we're just going to go off the idea that we're bearish on the weekly. So, with that in mind, time to jump down on the daily. Marking out your most obvious highs as buy-side liquidity, you have this one and you have this one. And then you mark out your sell-side liquidity. They are the most obvious highs and lows, which are also swing points, as you can see from the 3-candle formation. Because we are bearish on the weekly, I would like to see any buy-side liquidity just be sweeps, and sell-side liquidity to be taken out fully. So let's play this out. As you can see here, whilst we're consolidating, we also form immediate highs and lows, but we're going to ignore that for now and just go for the most obvious to make things not confusing. Right, so we get a sweep on buy-side liquidity. Because we're bearish, ideally I want this to just be a sweep and then we continue lower to take out sell-side fully. This also indicates that the big guys are taking out any stop losses here from short sellers to accumulate new positions before taking it down further to sell-side liquidity to exit out of their existing positions for profit. So this is taken out. Mark out these highs that have just been generated. It could retrace deeper and take out this overall buy-side liquidity before continuing lower. That is also a possible scenario. Alright, so replaying it out more. As you can see, these equal highs have stayed intact. Just because they're equal highs doesn't mean they'll get raided immediately. You always have to keep order flow in mind. Going further, we can see a small trendline liquidity that formed, which we could target next. Now I would like to see sell-side liquidity be taken out next. Every time a liquidity point is taken out, we could either expect a retracement or a reversal. So for example, in this instance, this buy-side liquidity got taken out, and then we got a reversal because on the higher time frame we're bearish. But then when this one got taken out, we could expect a small retracement now before continuing lower with the bearish higher time frame trend in mind. Okay, so our next draw will be on this one. However, we'll mark out this as well, as it could be used as sweeps. It's just sell side liquidity, buy side liquidity, what your overall bias is, which ones are most likely to stay intact, and which ones will get raided. Okay, so as you can see here, we're just continuing the bearish trend. Skipping forward even further, we're currently in a high time frame retracement. Just because we're in a bearish trend, we can't keep expecting price to continue lower to take out sell side without accumulating new positions at buy side. For example, even though we have relatively equal lows here, it stayed intact because following on from what I said earlier, if you want to follow the footsteps of these large guys who control the markets, they will need to go to buy side liquidity first to accumulate new positions before continuing lower. So in simple terms, they're triggering dumb money to buy and place their stop losses below all these lows, forming trendline liquidity for them to get raided and large funds pairing their existing orders with later to exit out of their positions. And there you go. That concludes the basics of liquidity. Essentially, all price does is move from areas of liquidity to opposing sides of liquidity in line with your overall bias. So if you found this video helpful, make sure you like and subscribe and comment any future videos you would like to see.